All right, this webinar is being recorded. Thank you, Richard. Glad you could make it. Sorry for the confusion. Thank you, Neil. Again, it's kind of an abbreviated version, but we've got an hour to go through some stuff here, and people that missed the live version, they'll catch up on the rebroadcast. Normally, I'll go ahead and do a poll, which talks about who uses trade ideas in here that's listening and who doesn't use trade ideas and not. But we don't have a full quorum today, so I'm going to go ahead and forego that poll. I'm going to go ahead and show my screen here real quick. And monitor one. All right. Jamie, are you with me, my friend?
I am indeed, Steve. I keep thinking it's Monday.
I know. Happy Tuesday.
Playing its tricks, but it is Tuesday.
Tuesday.
And usually your co-pilot, but he had some things to take care of, so I'll be subbing in today.
Yep.
How's it going, everybody?
Sounds good. Thank you, everybody, again. So from what I can tell, people are viewing the screen, they are hearing our voices, and we are recording. So again, apologies to those who got the mismarked email. We'll go ahead and start the trade of the week here and do it live in all its glory. All right, so again, I'm your host, Jamie Hodge, a longtime user and educator at Trade Ideas. Will be the co-host. And I don't anticipate too many questions. Again, we've got about 1/3 the attendees that we normally have in here. But if you feel like shooting a question while we're talking, go ahead. We'll do our best to get at it while we can. Otherwise, the webinar will be, we'll have some questions and answers at the end here. Okay, smart stop. Good question, ×3. Neil, I'm going to have you submit that to info@trade-ideas, and then I'll have the right person that's really good at custom formulas reply to that, or I may even forward it to them, info@trade-ideas.com. I'm sending you that email right now, and yeah, we will definitely get somebody on that custom formula to let you know if you're on the right track. Okay, everybody else, thank you. It's September 5th. This is the trade of the week. It is 2 p.m. Eastern, 5 p.m. East Coast. Real quick before we get started, the typical disclaimer to make our attorneys happy. Just be aware that everything you're going to see and hear here today is not to be construed as personal investment advice or financial advice. If you're looking for financial advice, well, technically you need to seek out the guys who have the licenses and what am I looking for? The fiduciary tests that they all take. Those are the guys that are licensed to help you. Brokers with series license and registered investment advisors. We, on the other hand, are just a bunch of goofball traders and content providers and software developers. So what we're showing you here should not be construed as investment advice. We're content providers, software as a service. So just please keep that in mind. And thank you. Real quick, you're not alone with trade ideas. Every week we talk about this, and I'll just jam through this quickly for those who haven't seen this slide. This is the live trading room here on the right. Joining the live trading room is free. You do not have to be a subscriber with Trade Ideas, but it's a great way to get in and kind of see Barry Anderson, how he uses the program and moderates the room and shows the technology in real time. Few hundred people in there typically every day, and free is a great price. So if you don't have a trading room and you're looking for one, I think you just found one. Join the free Trade Ideas trading room hosted by Barry Anderson daily during market hours. The webinar schedule is pretty, of course, after today's confusion, I was going to say pretty basic, but typically it's 2 p.m. Eastern, 2 p.m. Pacific, 5 p.m. Eastern. Monday, Tuesday, Wednesday, Thursday. We have different content each day of the week. Today is the trade of the week, where we kind of focus in on the trade of the week active and the past couple trades of the week. We'll go over some features and functions. We'll take a look at the market. Tomorrow is the questions and answer Wednesday webinar with CEO Dan Merkin and Brad Williams. A little different tone on those webinars, a lot more what's coming new, what are the things to keep an eye out for, and questions and answers, etc. Thursday, the Trading Studio, Andy will be back. He'll be hosting that one again with Jamie riding shotgun, talking about things that happened that day, taking a look at the AI and market-related items. And lastly, the Friday support session is a new deal. So between 11 a.m. and 2 p.m. Eastern, if you're on our webinar email list and you're getting correct times sent to you, the Friday support session for new users or old users alike is a great it's a great event. We get a lot of good feedback from that. People that maybe just signed up a few days ago and want to hit the learning curve running. We open up our desktops for 3 hours in the same fashion that we're doing right here using GoToWebinar with the questions and answers box. And then lastly, what is not on here is I'm going to give out a promo code at the end of the webinar to save 15% off your first month or first year of Trade Ideas. And included in your first month is a free 1-hour session with one of us. And what that means is you get yourself and one of us, just the two of us, for a whole hour, so we can help you do screen sharing like we're doing now and help you guys find the best way to use the program for you going forward. Some people are looking for slower swing trading ideas and setups, and some people are looking for faster stuff. Some people just have a handful of questions they want to answer, and some people just want to be taken through an entire 1-hour tour of the product and have questions generated that way. So all of those things combined make up this slide. You're not alone with Trade Ideas. We do our best for customer support and ongoing concierge service to onboard the new trader, which is probably why we're seeing subscriber growth going parabolic, which in fact we are seeing in this slide alone. So I always like to include that slide after we talk a lot about this kind of stuff, the free stuff, the content, the onboarding, the learning curve. All right, and then for the advanced users, this is not a newbie tool or even a slight intermediate tool. It's more of a late intermediate expert tool. And what I mean by that is your experience with the market and maybe even Trade Ideas. What Brokerage Plus does is allows you to connect Trade Ideas alerts that come out in real time, the A windows, and those A windows can actually trigger a trade through interactive brokers. Now, of course, you're setting this up on your end with risk parameters and trailing stops and share sizes and things like that. So it is a very advanced feature, advanced tool. It's been in beta for a few months now. We'll probably be in beta for at least another month or so. But this is kind of the future of where we're going in terms of servicing the people that want to automate their trading. There's more and more people that are gravitating towards this tool, but again, it's not a newbie tool. Newbies need to learn how to walk, then crawl first, what the market's all about, then running and walking and running is where we start to get into this Brokerage Plus Autobot trading. So for more information on that, we don't talk a whole lot about that here, but for people who want more info, trade-ideas.com/download. You can go to that URL, and if you have any questions about IB Plus, Trade Brokerage Plus for IB, please forward those questions to info@trade-ideas.com, and somebody in that department will get back to you and give you the basics on how to get started with our bot program. Again, I'm going to keep this slide up because it really is going to hone in the theme, especially the theme that we have coming up in our California Summit in Carlsbad, October 1st, the Trade Ideas 2017 Summit. We'll talk more about that. But the idea is man plus machine is really the way to be. Paul Tudor Jones, one of the best living traders right now, is quoted as recently saying, "No man is better than a machine, and no machine is better than a man with a machine." So what this is saying is we're embracing AI technology and the technology in general, but it's not, all or none. It's not a complete package. We still have to use our own discernible thought processes and discretions when taking trades and managing risk, but Trade Ideas does a great job at delivering you a good list of potential candidates. So here's the agenda for today. We'll go over kind of a market recap as we always do. I'm calling it Pavlov's bounce. Other people might call it buy the effing dip. That's what we still seem to be in. We'll go through the AI as our recap of some of the triggers that were taken and given today and some of the observations. The trade of the week recap. Technically, the trade of the week did not fire today. The big gap down in the market certainly kept us out of trouble on that one, and that was actually by design. And then we'll take a look at some of the sectors. Let's see how the sectors are looking, and then if we have some time, maybe 5 minutes of Q&A at the end. So before I go forward, I want to bring Jamie back on. I want to have him explain a little bit more. I'll set it up for him. I'll tee it up. But this is what we call the compare count windows, kind of like tick data, new highs versus new lows. And what Jamie did is he broke it down into 4 different quadrants. Small caps, sub 2 billion market cap, and then 2 to 4 billion market cap in this square. This square is above 4 billion market cap. And then this one is above 5.4 billion market cap. So we got 4 different pieces of data here, and let me bring Jamie on to kind of explain how he uses this at what time of day and what it told us today.
Certainly, Steve. Thanks for teeing that up for me. Okay, so as Steve said, these are called compare count windows, which allow us to basically create positive event, negative event, green event, red event. But basically, there's a metric that's been around on the NYSE for a very long time, the tick, which is simply advancers versus decliners, right? Across the board, so you get all kinds of thinly traded things and whatnot. This is more of a way to create a custom version of a tick. So in other words, one of my general theories about trading on a daily basis is go to where the party is, right? If you're gonna go out at night, you don't go, hey, let's go to the place where nobody is. You wanna go, you know, be festive, and that typically involves crowds of happy people. Well, where the party is in the market is where the volume is, because everybody's got certain patterns that they like to play, continuations, bounces, right? But if we're talking about continuations, if we are a old school sail ship, maybe we're a pirate, maybe we're not, but all we have is the wind, we better know which way the wind is blowing and how hard it's blowing, right? And this is a way to get a peek, right, at the footprints that the institutions leave behind on their institutional orders in the opening 15 to 20 minutes. So in other words, what we saw today after the first 20 minutes is the big caps with accelerated volume during that period, which means a lot higher than normal for that period, that opening 5, 10, 15, 20 minutes. It's like a tracker tracking an animal. You and I look at the ground, we see nothing, but to the trained eye or the trained metric, you see the broken twig, you see the little piece of hair on a branch, whatever, tracking that animal. It's the same thing here. This, in essence, is giving us a little peek of what the future might hold for the rest of the day. We're tempering our expectations, in other words. So these readings were pretty significant, because once you start watching these windows, typically what you find out is anything below 55% one way or the other, you know, that is a bias, but the effect is not going to be as dramatic. In other words, the wind's blowing that direction, but it could be blowing a lot harder. Now, in this case, anything over 55%, that's when my ears really start perking up. So seeing 57 to 58% sell pressure on what I perceive to be the institutional or the institutional market. And then Steve, if you want to just pull up a intraday time frame SPY chart, we can take a look at where the SPY was after that 15 to 20 minutes. All right, so you got the 15.
Here, I'm going to mark up 30 minutes. That horizontal line was 30 minutes right there.
Okay, so we got our peek into what might occur, right? 20 minutes in, right? So just at the beginning of that green candle, my compare count windows are telling me not only is there higher than normal sell volume during this time period, but it's above 55%, and it's pretty close to 60%. And from my experience, once you get above that 55 mark, and especially approaching 60, that's when you can really get a peek. You know, they can't get all their orders done in that period, but they get a lot of a big piece of that order done. So what they're doing is,
yes,
they're leaving behind footprints that we can read by using this methodology. And what I do is I post this information every morning on my Twitter feed. So you can go back and you can look at each opening 20-minute compare count and then look at what the market did in relation to this information. And I think you're going to be pretty, well, impressed, for lack of a better description, but it really does help us because, hey, and by the way, you saw when we get into Holly, she had a pretty tough go of it today trying to go long. So, you know, if we get that information before the rest of the crowd even has an idea to start letting the wheels turn because they're not using this type of methodology, that was a pretty big informational advantage on this session. I mean, you could have just waited for the SPY to break that low and then had a nice solid entry on the SPY alone, much less all the other stocks that were going to be, you know, sucked down into that little short-term whirlpool. So I hope that makes sense.
Yes, just to re-encapsulate, those four windows are looking at different levels of market capitalization, and Jamie's usually focused on the bigger guys. And after about a 20-minute opening snapshot into the market, we can see a leaning bias on the sell side. There are more new lows than new highs in the big cap land. Now, I happen to know just from feedback and emails, there's a few people that have been using this indicator that Jamie's been talking about, and they're really liking it. Anything that we can do to try and help us gauge what we've got ahead of us coming using the Trade Ideas tools is always a good thing. And what that was certainly portending was for some weakness near term, and we got it. Yeah, Steve D is confirming what I was talking about with your ideas there, Jamie. So yeah, once again, Jamie is at QuantBot. We'll talk about more of that at the end of the session. So that was a great place to start, Jamie's compare account windows, to come in and talk about the market and where we are, where we have been, and where we might be going. I've talked a lot about these big distribution days, and I even made a bold call back down here on the gap down that, or overnight, that I was leaning bearish now. I was no longer waffling. I was saying I'm bearish until further notice. Well, the Pavlovian spirit of this market has been to buy the dip back here, back here, back here, going back as far as I want to go. Buy the dip works. And in a Pavlovian way, that is what happened last week. Let me put you on mute real quick. I got to close the window because, you know, it never fails. The lawn guy shows up at this time. Hang on. Sorry about that. I could certainly do without that distraction. Okay, so where I was the market is still conditioned to buy the dip, regardless of the news. Here's the story. North Korea has a nuclear weapon. Okay, no big deal. Gap up and bounce. And then last night, North Korea not only has a nuclear weapon, it has a hydrogen weapon. Oh my God, bounce it, buy it back. So the condition of the market is still, you know, what's been working for 7 or 8 years. And by the way, I did say what would take me out of the bearish camp. This orange line right here, I said, if we trade back above that orange line, I'll take my bearish hat off, which I did. So I'm kind of back into no man's land here. But what we saw was a very exaggerated 1 week bounce on low volume. Once again, I'll give it that, except for this. Actually, this one day here was pretty decent volume. So back into the neutral camp. I don't know which way we're going to go. We keep threatening to sell off with high volume down days. But as I said, the Pavlovian response of this market to buy the effing dip just means jump right back in regardless of the news and buy it. And it looks like that's going to continue to work until it doesn't. At some point, it's not going to, and there'll be a day where a lot of people step in to buy dips and they get run over. But until that day has come, we still have the major uptrend. Oops, let me try and make that. The major uptrend, for the most part, still intact. Personally, yes, I did try to get a little bit cute last week using these two big down days and down bars of huge down volume to put my bearish hat on, but it's just too hard to fight the buy the effing dip crowd and the central banks. And until that's the case, Just back to a kind of a neutral stance here. So the spiders, nice recovery off of lows. I mean, it did look ugly for a while, but nice recovery right off of prior resistance back here. That green line shows that a line was triggered on a pullback, which was kind of prior support or prior resistance, I should say. Same looking chart in the Qs, a big bounce off of a level that needed to be held. This was our level of a breakout way back here, and then it's kind of become no man's land since then. So the price, as I said, to keep in the good graces of the bulls, Qs should really fight to stay between these two orange lines right here. Sold off very heavily this morning and got most of it back, I'm sorry, half of it back today. The IWM and the Dow didn't have as much resiliency to it. The IWM was down 1.121 in relative volume, so it had some decent volume, and it was down almost a full percent. We can see not quite the vigorous bounce that we got in the Qs and the spiders. And the diamond was worst of all. Diamond was down a 1 full percent on 1.65 relative volume, and the bounce was only maybe 20%, 25% versus the bounce that we got in the spiders in the Qs, kind of a nice 50% bounce off of lows. So, if we had closed on lows again today, I might be maybe singing a different tune, but the fact that the buyers stepped in at the end, midday into the end of the day, which is more visible here on the intraday candles. We broke down, the buyers stepped back in, and that is the transition to the AI where we talk about risk on versus risk off. And so risk on essentially started the day in a difficult situation because if we look, the trades that were fired today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 longs and 1 short. Let's do one better. Let's sort them by the time of day. So the first trade that actually came out today was going short right at the top of the hour, 10 o'clock Eastern. About the same time Jamie was looking at those compare count windows, thinking that there was a lot of institutional selling coming. And then we got a little bit of a confirmation by Holly going short STT, but then in the same moment, we got a long as well. So there really was no directional bias to try and figure out this morning on which direction to go. And so what my point was is risk on versus risk off. What's risk off? Risk off is essentially tallying up the totals based on Holly the AI's exit. Okay, it might be a profit stop loss or a target or a profit save or even a time stop. But risk on is what we monitor going into the entire close, ignoring the exits of Holly. And if we have a broad-based rally in the market and most of our directional calls are on the long side, which is what we had today, well, that would make sense why the histogram here, see this risk off? Kind of ugly. Nothing really to report home, 31 cents on the in and outs of Hollies. But if those trades were left open all day long, or if you were paying attention to a couple of trades that we're going to call out here and highlight in a moment, as the market drifted back higher, the histogram here for the profit and loss kind of dictates exactly what was happening. We had a lot of long calls. They went negative as the market went to lows, but then as the buyers came and stepped in, the stocks that were called out by Holly on the long side started to get bid and started to get bid up aggressively. So the risk on actually finished up $3.12. And we'll go through a couple here. I'll start with this first one. I've talked before, and Andy's talked about it too. When Holly does decide to take short trades, I really like the trade selections that are done with a fading type of an entry. In this case, look at what we've got here. We had the opening 15-minute candle, a second 15-minute candle, and then right at the top of the hour, a push through yesterday's resistance, and that's where the AI put this downward arrow and said, nope, short call. The name of the strategy is putting on the brakes, meaning it was moving forward in one direction, and we're going to put on the brakes and fade and go the opposite direction. So what I mean by a fade is that it's not chasing new lows. Chasing new lows to the downside to short this market has been very futile. Been hard. These things bounce quick. But if we wait for our pitch and wait for the moment where the price bounces up into an area where the statistically probable AI sees a reason to go short here, well, I prefer this entry much more than chasing a short entry. And the same thing goes for pullback entries on other ones. So let's break this one down here real quick. Nice pullback into the zone. The price went through it by about 10 cents. So those of you that maybe wanted a better price could have actually got one on the short side. And then the stock started working for us. Now, if we go down and look, the exit reason was profit save, which typically means trailing stop. So in a trailing stop world, what that meant was that the AI got in the money to a certain degree where if the price was going to reverse and go back to a flat, well, the AI is not going to allow a winning trade that was up, in this case, 12 cents to turn around and go back unchanged or go back red. So the AI exited the trade for a 12-cent winner. But with the market being as weak as it was throughout the day, we can see, minus this midday bounce, this was a pretty decent short call with a really nice entry as far as I'm concerned. And it looks like it delivered about $1.50 in total alpha by the end of the day. Let's see, there was one more. Yeah, this PULM. This one was talked about in a lot of chat rooms today. The AI basically had this thing pegged right on the breakout, right there at $1.87. If we look at this particular column right here, risk on percentage, we had a 32% gain in this dollar stock PULM today. So, I kind of was tickled to look around and see a lot of people patting themselves on the back that their chat room caught PULM at some point today. And I actually had to remind a few people on Twitter that our Holly AI actually caught PULM at $1.87, which was pretty darn early and had a really nice day. How about I let you talk about a couple, if you want to pick up something. Jamie, did you want to say? There you go.
No, I was just commenting that that's just such a gorgeous trade.
Yes, it was. It was gorgeous because it was quiet, and then boom, volume spike, and the AI had it called and had it triggered. On the daily chart, it's been in kind of an ugly downtrend. We have had a nice maybe 15-day kind of a congestion period here, but that was a really nice entry call with a good example of risk on, letting the trade work for you. Now, what I can say is we always say look left, okay, on our daily chart. Let's look left here. Didn't take long before PULM was pretty much breaking above the prior resistance from 2 or 3 weeks ago. And so, if you're in the trade and you're above that level, you got to ask yourself, do I really want to get out here? We just broke out. Maybe I want to sell half and let the other half go. It's totally up to you. But that was a very nice trade, especially for people who only like to trade stocks under $10. It was a really nice 30% mover today. And then another one, quarterback. This is one of my strategies that I've actually created and uploaded into the Holly system. It's essentially looking for strong stocks that just so happen to pull back 25%. And thus is the name quarterback, 25% pullback. First thing that comes to mind, beautiful daily chart. We look left, nothing there. I can't zoom out anymore. Why? This is a new issue. So basically, Holly was calling this trade at all-time highs. So as I was saying on the last chart, you got to look left and see where the upcoming resistance is to help you guys make your decisions if you want to get into it and how long you might want to stay into it. The other thing that comes to note is this was called later in the day. It was called at around 2:30 Eastern. But again, just like the putting on the brakes, the short strategy that popped up into the level that we faded it at, this is the opposite. This is a pullback strategy. And so here you can see our candle. And at one point, this candle was on highs here for the day, and then it pulled back 25%. And because it was so strong on the daily and the volumes and everything else were lining up, the pullback, this blue line right here, 1825, serves as what we would call a pullback entry. So the pullback entry, once again, overshot just a little bit, and you could have got it. It almost actually stopped out. So it went about 20 cents, 23 cents below its initial entry, then popped right back up. Same thing is the profit save on this one. Holly took out 14 cents on the choppiness here. It didn't want to let a winning trade go back to a negative loser. But in the end of the day, as the buyers stepped back in, this was a really nice risk-on trade, evidenced by the daily chart not having any resistance in sight. All right. Jamie, you're always good at finding some insights on the day. Anything that I missed that you might want to comment on?
No, it's some really good trades spit out there. The comment I'll make here is just that when you're looking at Holly, and you might be thinking, if you've never seen her before, or maybe you're just trying to grapple with the fact of, well, why does she get out so early with profit save or reduced risk? And I just always like to point out that Holly's superpower are her statistically weighted entries. She's not real good at making exits, but we have to give her some type of rule set to abide by. So that's why a lot of the times, just like that poem trade, it's just flatlining and she gets out. But our human eyes would tell us something different. Yeah, there's not really any reason to get out of the trade, and then we go risk on. So yeah, we're a little bit better at reading the charts and making the exits, where her strong side is the entry, and that's the man and the machine working together.
Mm-hmm. And what a lot of times people might do is consider what's called a trade around. Maybe they were in this trade early and they missed it, or they got stopped out for a flat. The calls are good for all day long. So sometimes, if you just want to keep one eye on that trade going forward, we can have, secondary entries on your own discretion called trade arounds. But the trade arounds are up to you to identify, what the range is. And if that range happens to break, do you want to participate? So whenever you hear us say the word a trade around, means that it was something that was put on our radar as traders today. All of these symbols are on here for a reason, because the AI found them to be statistically probable, triggering at a certain level. But that doesn't mean that we basically just take it off our radar if it doesn't work, and Holly takes a 5-cent exit and gets out too quick for reduced risk, because the market can always turn back. Here's a classic example right here in Poem. Basically, Holly got out for a 4-cent loss in PULM because reduced risk. It wasn't doing exactly what it had thought the AI thought it was going to do. Hang on one second here.
And Steve, while you're taking care of that, what I'll say is that, what do I think? What was I thinking when Holly called this and I saw it flatlining? I'm liking it because the risk is so low, even if you use the original stop loss or you tighten it up to the bottom of that range on that second candle there. But the bottom line is this: you're already in it from a statistically weighted strategy. Let's see, wake up call, one of the old standards, right?
Mm-hmm.
So you've got some decent statistical probability on your side already, and then lo and behold, when it pops out of that range, oh, that's a range break. Oh, maybe it's going to go, and then the rest is history, right? Even had time to probably maybe add a second lot on the range break as well, So.
And this is where the price alerts, which I'm trying to say, can come in real handy at setting price alerts at certain levels. If you're a premium member of Trade Ideas, you recall that we can right-click and set a price alert and just put the notes in there. I'll call it Holly 2.0 or Holly Trade Around. Something that was interesting in the morning, but may not be ready to go in your eyes. If the AI got out of it too soon, well, if we turn our back on it, the only way to know about it is to set some sort of an alert. So just some concepts to think about there as well. Okay, where to next? All right, the trade of the week recaps. Let's just start right with this week's trade of the week, which was a conditional one. If you read the email, you said it was conditional to buy ACIA, Acacia, above the high of this wick right here. How did this all come into play? Well, again, for those that have heard me talk a lot about the trend change lubricant scan, which tries to exploit stocks that are breaking down but basing and turning and building a base with higher lows and higher highs, and then turning higher with, I might add, the special secret sauce of the sorting by short to float. Well, Acacia is not on this list today because of the pullback, but we do know that Acacia has 49% short to float on only 24 million shares. So knowing what we knew going into the weekend, minus this big red candle here, we had a stock that was basing, almost delivering an inverted head and shoulders to us, and that blue line was pretty definitive. That was the high going back on this day, and it was the base going back here. So we had a pretty good pivot line. And that's really the genesis of picking trend reversal trades the way we do, looking for that pivot line and focusing on stock symbols that have a very high short float. So today could have gone very different had the market not gapped down and crapped. I have a pretty good suspicion that that's why this particular trade just fell down along with the market. But if you recall, the content of the email was to buy above 50.11. So there's our breakout right there. So going into the week, we kind of knew that if the market was going to get weak on Monday, there's a chance that this trade wouldn't trigger, and there'd be no harm, no foul if there was no trigger. It's better to have no trade than a trigger that immediately reverses on us and starts going the opposite direction. Now, I also mentioned that it's a long week. Well, it's a short week, but we still have 3 days. There's nothing that says that this price of Acacia couldn't turn around and break through these levels Wednesday, Thursday, or Friday. And if they do, consider the trade to still be live and open this week. But doing it as a conditional kind of gives us a little bit of breathing room to not have to force a trade. We'd rather have the trade come to us in our terms, which is exactly the way it was setting up over the weekend with a nice flag here, looking for a direction. And today the direction was chosen. And again, I feel that this pretty much happened because of the tremendous selling that we did have on the gap down and the rollover and the selling for most of the day. So that was Acacia, which is the current trade of the week, but it is still active. Wednesday, Thursday, Friday, it still could trigger. Last week's trade of the week was when I was starting to put the bearish hat on and was proven wrong. So we did have a nice stop out, a definable downside risk as the markets ran to highs. I ate the dog food. I said this is where I would stop being bearish. And we went through that number a bit more and then bounced with today's weakness. So, I don't know. If I put the Qs back up on here, maybe I wasn't wrong. I was just early. I don't know, but I'm not going to, be that bold as to say we're getting ready for a sell-off again. These bounce backs, these Pavlovian buy the dips are just way too strong. So until that abates, until we have some more technical reasons, I'm just going to hold a neutral stance until further notice. What is working was the trade of the week before that. And I've been extolling the virtues for a while now of what I've been seeing in gold and in the gold miners. Here's the GDX. So our original call, we were in the money on GDX, and then we had a bit of a pullback in gold, but buy the dippers of gold jumped back in, and we've just been winding higher ever since. This is exactly what I was hoping the GDX trade would do. And for those that want to keep score, I would say this is probably going to be the first level of supply to come into play here, basically the high of that candle and close to the high of these candles here. So if hopefully you're sitting in a full load of GDX, if we are lucky enough to get up to these levels here anytime soon, these could be areas where you maybe sell a third, sell a half, or something just to kind of lighten the load and help with the emotions. Looking at GLD, having a nice runaway with that as well. So the GDX call again was when we were initially starting to throw out some caution flags and noticing a lot of those distribution days in the SPYs and Qs, but calling a defensively named sector such as the gold miners was definitely the order of the week for that trade of the week. The last one is Micron, MU. Basically, this was 2 weeks ago, coming out of this nice flagging pattern. Again, not wanting to load up the trade of the weeks with too many defensive plays, or like a quid was, in fact, an actual short play, trying to keep the playing board evenly spread with longs and defensive plays. But a nice candle so far in Micron today. Again, this was where we called it. We broke out. We've had a really nice 5-day run from last week in Micron. Bit of a pullback, but then we bounced right on Q, right at the low of that level, which was the high of that level back there and some congestion back here. So what I would say to the Micron holders is probably a good idea to move up your trailing stop. Profit save, as Holly would call it. I would not want to see Micron take out the lows of today for the open trade of the week if anybody is still in Micron. It'll probably depend a lot on what the market's doing, but again, it was nice to see a decent bounce off of lows into the close today on Micron. So those are the trades of the week. Again, this week is Acacia. It may fire, it may not. Pretty ugly day today, but we saved ourselves by calling and not saying, oh, just go ahead and buy it at the open. That would be a little bit irresponsible on our parts, waiting for the actual breakout of a pivot level. That is where we start to get the short squeeze of 49% to pay attention, and that's the idea behind a lot of these trend change lubricant calls that have a lot of short float behind them. Okay. All right, let me see if I check my notes here, if I had anything else to say. Oh, you know what? This one just drives me nuts. This is a trade of the week from about 5 or 6 weeks ago. BRS, another giant short float. Look at this, 64% short float in BRS, 31 million. Well, here was our day. Here was our happy day. We had a 5% move in the right direction after the stock triggered, and then it basically reverted on us all the way down, almost as if magic, dumping us out, penny wicking us down at the stop, to come back and to break out a second time. But what I want to highlight for you guys here is just when I saw this morning, this was a perfect example of pivot levels where prior resistance here becomes current support. And that's the definition of a pivot level. So look at how really close, except for this little overshoot here, BRS, former trade of the week that did move 5%, but then moved against us, broke out a second time and then pulled back. And where do you think it dug in for the higher high? Well, it made its base camp right there at the former breakout level. So I bring up BRS not to just remind people that was a frustrating trade of the week, but a great example visually of pivot levels where prior resistance can become future support. So if you start to see stocks that got away from you and left the station, well, there's nothing to prevent you from pulling back and looking at the area from which it broke out of and maybe setting a price alert to create a pivot level pullback alert for a price pullback type of entry. All right, good to know. So that's it for the trade of the week section. What I wanted to do quickly moving forward was kind of check in with the sectors. All right, today was an interesting day. We're going to look at this on 2 different metrics. Even though we bounced today nicely in the spiders and the Qs, well, at the end of the day, change from the close on Friday, let's open up our cheat sheet here. The junior gold miners led the way. Let's click into that. Big day for junior gold miners. Oil, big day for oil. Oil service sectors, big day for oil service. The regular big cap gold miners, our friend GDX that we've been looking at. The treasuries, TLT, gold, the actual commodity, silver, the actual commodity. Well, guys, these are rather defensive plays, and they held their own today. Even though we bounced, these defensive sectors still finished the day at the top of the list. What got annihilated today? Easy. Financials, XLF, the banks, local banks, regional banks. China stocks got drubbed today. Even the semis took a bit of a hit today. We'll have to keep an eye on that, but a nice bounce at the close. So as far as today goes, even though we had a nice bounce and got back half the day, we still finished the day with our defensive sectors going out strong. We'll see what tomorrow brings. What I do sometimes, though, is I'll double click into this one. Remember our top list windows, we can sort by any one of these. I don't really care about relative volume. All I care about is the change from the prior day. And occasionally I'll check in with the 20-day strength. So now we're looking at what sectors are holding the best over a 20-day period. Well, the same culprits are defensive players, gold miners, gold, silver, treasuries. This is healthcare actually. No, I'm sorry, SLV, the Silver Trust. XLV is healthcare. So even over a 20-day span, we've done a lot of chutes and ladders, a lot of slides and bounces back up and slides back down. But over 20 days, the defensive stuff is still just as strong on a 20-day period as it was on, and then it just clicked it on an individual day period. So wanted to show you guys that. I felt that had some merit. I'm not going to stand here and say I'm bearish again. The buy the dip crowd certainly sobered me up, and I'm not one to try and call a lot of tops. Matter of fact, that was the first time I ever really said I was bearish in a few years. So live and learn. Just be flexible. Knowing where your out is, knowing where you got to throw in the hat and say I was wrong. It's time to open up my mind and reset, and back to the drawing board. So back to the drawing board we are. But we're going to need some more information to find out which is the path of least resistance. Higher or lower? I don't know. So that's pretty much all I've got for you today. Let's spend 5 minutes on some Q&A, shall we, Jamie? Unless there's anything else you want to add.
Nope, Q&A sounds good to me.
Q&A sounds good. So we can open up the floor. If you got a chart you want to look at, we can try and look at a chart. If you have a question about T&I functionality, we can do that as well. But again, we've got kind of about half the house we normally have today due to the email time mess up. And again, I apologize for that. That will not happen again next week. You guys are quiet today. I know Jamie's been doing a great job answering questions of the people that have been typing questions in. Let's see, what is the strike rate for these entry calls? I'm not sure I understand what you mean by strike rate.
I would assume that they're wanting to know how Holly has done with these calls over a period of time, is what I would guess.
If that's the case, if it's related to artificial intelligence, AI, best place to get the most recent AI performance blogs are on our site, trade-ideas.com. And down at the bottom here, we have a blog. And in that blog, every day, here's the trading room, and then this will be the last Trade Ideas that's podcast. And this is the last blog that was put up in terms of reference to Holly's morning huddle is what it's typically called. And so you can climb into any of the most recent blogs, and then you can see a pretty good performance by graph going back to January 2017 and some information that way. That's the best way to get information updated on the AI. Okay.
So, Steve, I'm going to let you handle that one.
The trading
about the foolproof, right? So, Demi, look, nothing is foolproof. Nothing is foolproof. You should never just take anything and trust it blindly, especially when you're a new trader. If you're a new trader, you need to go about the process in a slow manner and soak up as much education as you can. So attending these webinars to learn about Holly, the more you learn about Holly, the more you'll know if she's right for you, because you'll have an understanding or you won't. So the answer is no, nothing is foolproof, not even a highly advanced statistical model like Holly. So that's my 2 cents on that question.
Yeah, it's there really is no golden goose out there, and that's why we call her Holly, the Holy Grail. It's kind of a play on words. There is no Holy Grail. But what we consider this is the evolution of the first step was the alert windows. The second step in evolution was the top list windows, a few other things coming and going throughout the years, the channel bars, multi-strategy window, the single stock window. But the AI is basically taking our back testing, which anybody can do. They can back test a simple alert window, and then using that technology as the foundation to build on what is the most desired back-tested strategies using AI intelligence every evening, doing about 1 million back tests. And so we just look at it as like the house odds, the casino odds. The AI in the end is going to, it's going to blossom, it's going to shine in the end. Are there going to be losing trades along the way? Sure, there will be, just like the house loses a couple of blackjack hands to good traders or players in their casino. So we're just trying to get the odds stacked in our favor. But again, I want to go back to really hammer this point. Man and machine combined. we're doing the best to deliver the machine to give us a handful of selected good ideas, but it still is up to the man or the human or the woman to make the discretionary decision as to when to pull the trigger and what to do with it. There used to be a service out there called Wise Trade that tried to market to people late at night, up late at night, worrying about, finances. Just follow the green light, red light, green light. It's as easy as that. Bullshit. That's why they're out of business, and that's why there's class action lawsuits against them. So I won't say anything more about that other than we try to help discern what is the directional bias of the day. Well, as far as Holly was concerned, the directional bias was long, except for the one short trade that came through. The remainder of the day, all she was attempting was longs. There's going to be days where we come in here and we don't see very many longs, and all we see are shorts. So like a canary in the coal mine, we can discern, okay, well, the intelligent, unemotional artificial intelligence is not wasting its time with longs today. It's only focusing on shorts. So it's more of a guideline, more of a sophisticated alert to help point us in the right direction. Okay. The details were strategies. Good question. Let me do that. Let me go back to the website. Now, not every single strategy is going to show up on the starting bench. This is the starting bench I'm talking about right here, from here to here. These are the ones that made the cut last night. But in total, there's over 35 or so strategies that get back tested every single evening. And the way to find the thumbnails on those descriptions, again, at the bottom of the page, under support, frequently asked questions, AI strategy descriptions. So if something comes out that you're curious about and you want to know what the heck is bond shorty, well, it's in red. So that means it's a short strategy. And this particular strategy is looking for momentum. Kind of the opposite of what I was talking about earlier. It's not waiting for a bounce to fade. It's waiting for a new low to jump into and try and pile on the momentum. And a bit of a description as to what some of the filters are looking for. So that's what we can give you and provide for all of the strategies. And again, all the strategies in the hopper that will show up from time to time are on this page. But the ones that are only going to be available for the day, look at this like a starting lineup bench, for an NCAA basketball team or something. These guys got into the game here. These guys didn't. These guys were riding the bench today because there was no circumstance which warranted the triggering of these particular strategies. All right. Hope that makes sense. I think we're all caught up on the questions. So what I'm going to do is I'm going to kind of walk you guys out like Scott normally does. Again, if you missed any part of this, it was recorded, and I'll upload it to our Trade Ideas YouTube page. But for the time being, let's just go right into the back end. Reminder that we have a podcast every Friday. Our newest and most exciting employee, Sean McLaughlin, who just joined Trade Ideas, was a guest on our most recent podcast, I believe, or maybe that was a week ago. You'll have to tune in to hear that. But to find the podcast, all you got to do is do a Google search for Trade Ideas Podcast, or go to the App Store or your favorite place to download podcasts. All right. Every Friday, and it's available usually a couple hours after the close on Fridays. As promised, here is your promotion code. So at checkout, if you're a new user and you want to try out Trade Ideas, remember, you can spend 1 hour with us doing a 1 hour power hour session where we really get you going in the right direction and help you with your learning curve. That's free. Normally it's $99 if you want to come back and spend another hour of one-on-one consulting and help. But you will get that free from your first month or your first year. Use AI-powered, all caps, as your promo code at the checkout, and that'll give you 15% off the first month or the first year of premium or standard. The basic difference is in premium, you've got artificial intelligence, the back testing module, which I alluded to, which the AI is built on top of, and also the price alerts that you heard me allude to, right-clicking in the chart and setting price alerts. So if something's triggered, we never miss it. Other than that, TI Standard is everything else you need, the top list windows, the charts, the channel bar, the single stock windows, the alert windows, and the single stock window, and everything else that's not on this side. All right, so again, it's not on here at the moment, but Jamie is at QuantBot. If I go back real quick, you guys can see on the back side here at QUANT BOT. He is going to usually display what he sees and his commentary on that after the market open. And I saw somebody commented that maybe he might want to let Barry know what's going on as well so he can alert the room. I'll make that mention to Jamie. But if you want to get a hold of myself or basic trade ideas in general, this info@trade-ideas.com is the best place to start. We'll triage your request or your comment and route that to the right person. If you want to write me personally, you can do steve@trade-ideas.com. I am also on Twitter, @todaytrader is my handle. Dan Merkin, our CEO, always has interesting things to say, off topic as well. He is @TradeIdeas1. The phone number down here primarily should be only used for accounting issues. Chances are you're going to have to leave a voicemail and get a call back the same day or within 24 hours, but try to save your usage of this phone to just accounting questions, because if you guys don't realize it, you can come in to our website at any point down here and use the live chat support to get us during market hours. It's another way to get a hold of us. So that's it. I thank you all for showing up. Those that made it, you're very resourceful. Thank you. For those that didn't, we'll see you on the flip side and on the recording this evening. Thank you, Jamie, for answering questions and helping me out. Thanks you guys for the questions and for the kind comments. And we will see you all at possibly tomorrow's webinar with Dan and Brad, the Q&A, which goes off at 5 p.m. Eastern, I promise. All right, Jamie.
Hey, good stuff, Steve. Really good stuff. And we'll see you on the morrow.
Sounds good. Talk to you guys later. Thank you for showing up. Bye-bye.